Hi ladies and gentlemen, this is Game of Trades and this is going to be a technical analysis of the S&P 500 index. So after a huge rally leading into 2020 and a huge breakout to all-time highs, we are fairly confident that the market has put this entire consolidation period behind us, this entire 2018, 2019 period of sideways trading behind us. We are definitely now much higher up after this huge intense rally to all-time highs. Now that being said, anything can still happen in the markets, especially if economic indicators start to turn around and we start seeing fundamental problems in the economy, which is currently not out of the question. Then we could definitely see more downside in the stock market. This is definitely one target that I am prepared for in case things turn around for the worst. Now, obviously, this is not my preferred scenario. This is not the most realistic scenario, but as a swing trader, as a part-time active trader, I have learned that preparing for as many potential outcomes can often help you in your trading to not be surprised when certain things happen. Having the mentality of always being bullish, everything's going to be fine, everything's going to be good is not a good strategy if you want to make money all the time in the markets, because the markets do sometimes go down. They more often go up than down, but they do sometimes go down. And in periods like these, where you get a stock market crash out of nowhere, you need to be prepared. You need to have your stop losses, and you need to also have a strategy to profit from these types of corrections in the market. Now, I do have a reason to believe that we are currently seeing a temporary topping pattern in the markets. I'm seeing a few things on the charts, on the daily chart and on the weekly chart, that may indicate potential an impact on price in the next few weeks, in the next few months potentially. And really, you should not be surprised by that. I am not surprised by that. That's how the markets work. That's how the markets have always worked. Even when you are in an uptrend, you have periods of extreme growth with huge rallies, and then you have periods of consolidation in price where you have very little gains in price for multiple months. You can see this is from May 2000, end of April 2019, all the way to October 2019. So for the entire summer months, we had very little gains in the markets, and then we resumed the uptrend all the way to all-time highs to what we are seeing now. And let's see what happens in the future. Now, before I go deeper into the video, make sure to like and subscribe if you enjoy this video. I post analysis on the markets, on natural gas and other commodities on this channel, and I try to keep it different in every video to try and explore as many theories, hypotheses in the markets that we could see in the future. Now let me clear this chart and then we'll dive straight into the technicals, and I'll explain exactly why I think that we are currently making a potential top in the market. So the first thing that I see on the chart is heavy RSI divergence. This is definitely something I love to look at when looking for a correction in the markets. It's the first time we're seeing real RSI divergence since the beginning of this huge rally. So this is definitely something to look at. We extended the divergence from here, and that's what happens with divergence. It is not a sell signal on its own, but it is definitely an indication that things may turn around, and that is why I'm making this video now. But the price doesn't necessarily need to correct straight away. This divergence can actually extend for a while. As you can see, I made a little wedge pattern here just to illustrate exactly where we could potentially go. And if you extend this wedge, we can actually go a lot higher before this wedge breaks. And what this line is, this line represents the divergence. So you've got the divergence line on the price going up and this line going down. That's why it's called divergence. And it often forms a little wedge pattern with an uptrend line. and you can see you can extend this very high up, and the sell signal only comes when you get the break of the trend line, and when you do get that break of trend line, everything plays out and you'll get the correction in price. Now I can show you a past example. This is a such an example where we had very similar to what we're seeing now. I talked about this in my last video briefly. We did see a strong rally here in the beginning of 2019, followed by a divergence building. You can see we had divergence. Less so on the RSI, but we did have divergence on the MACD right here. So that's, it's the exact same thing. It plays out the same way. We had the wedge pattern extending, and then it broke, and we had that period right after of sideways action where the bulls did not make much money, and it really wasn't a great time to be fully invested into the S&P 500, and that's exactly why I love these, because I know that when I see these, I can put my money elsewhere where I see more potential than on the S&P 500, and wait till we see a breakout of such to reinvest back into the S&P 500 for the next leg up. And again, here, following this divergence, we both had a correction in time. You can in price, you can see we had a nice sudden drop, but we also had a correction in time, and that's definitely one of the characteristics of these divergences, is that they allow for both types of correction, warning long-term bullish investors and alerting potential short investors. Now I'm going to jump onto the weekly chart, and we're going to check out what I see on there. I see a few other warning signs for the stock market, so let's take a look at that. Alright, so this is the weekly chart, and you can see on this chart we have similar divergence to what we saw on the daily chart. And you can see right here the price is continuing on up. We're making 2 consecutive higher highs, while the RSI is making 2 lower highs. So this is definitely something to look at, especially on the weekly chart, because it can have consequences for multiple months. And I'm going to show you exactly what I mean. We're going to go back to 2015 here, and this is a time right after a period of huge gains in the markets, and we started seeing weekly divergence right here in June 2014. So if you follow weekly divergence and you saw this, you would have likely started easing out of your position in the S&P 500 about right here, because you would tell yourself, well, we're seeing divergence, so it's a slowdown in the gains, and it's likely that we're not going to make much gains in the future. And guess what happened in the future? I'm going to put a little arrow here, and we had a correction in time. So for a couple years after the divergence, we had a correction in time where investors made limited gains. So in this time of period, you would really want your money not to be in the S&P 500, but elsewhere in other commodities, stocks that may outperform the S&P 500, which definitely was the case. There are always other opportunities to invest into. And again, not only did we have a correction in time, we also had a correction in price. From the top here, we definitely, I think, had a double-digit correction from the top. It was a 15% correction top to bottom, so definitely something that is tradable, especially considering it was a double dip. So definitely something that if you were trading back here with divergence, you could have made some profit out of this. So now what is coming in the future? We're going to go back to what we're seeing now, and we're going to apply the same concepts that we covered just now. So we're seeing this pattern of staircase here with a leg up and then a leg down in time or price, and then another leg up a strong leg up with a breakout to all-time highs, which is starting to slow down, and then we're seeing a development of a wedge pattern here, and now we're gonna see a break and a correction in time or a correction in price. Now, either of those options, either the time option or the price option, are definitely realistic. Now, typically for a market that wants to head on higher in the future, for those of you who are bullish and who are looking to invest even more into the long term for the S&P 500, despite what we're seeing right now, then you'd want to look for a correction in time. These are generally less volatile and indicate less potential downside in the markets. If you see a big move down straight to backtest this level here, then that would be a little bit more worrying for the bulls. And I definitely revisit my more bearish outlook for the S&P 500. So that's about all I wanted to cover on this video. I hope you guys enjoyed. If you did, make sure to drop a like and subscribe if you haven't already. In the meantime, good luck on your trading and see you next time.